Suggestions, sir, on how to make the banking sector future ready have included the thought that we need to bring back development finance institutions in some form. It's a cycle, sir. We've gone through this debate so many times over. Has anything changed to make DFIs more viable or wholesale banks more viable?
See, it's a very interesting question. If I look at my BRICS experience, BRICS Bank experience, and the BRICS countries, each of the BRICS countries has a development bank of one form or the other. In particular, if I look at China, they have a very large development bank which has been handholding a whole lot of activity initially and continuing on the domestic front, but increasingly in a global context also. So they have found, and indeed Brazil has also found, that development banks are something that is required to handle development through the process. Now, what happened in India 20 years back or 25 years back now was access to long-term funding was withdrawn to development banks. And that is why we had to migrate to becoming a bank. Now, you then know the conditions really. If there is a development bank, the question that you'll have to really think of is, what is access to funds? Today we have a robust capital market, so there is an access to fund route there. B, we have global access. Again, India is, I would say, strongly a strong investment grade proposition, so we have access there. And C, this development bank could also borrow from multilateral development banks and online. And as necessary, the government could give a cover. So these are all broad thoughts that come into my mind based on what one saw happen in other domains. And I would think that is on the side of the institution. The side of the borrower, again, we see, I would say, again, 2 or 3 types of borrowers. One is private borrowers into the infrastructure project space or into very long period projects, that is, projects which will take or will need long-term funding. B, there could be also another space, which is government projects, which are structured as corporate entities, which could, or special purpose vehicles, which could borrow. Again, if I look at globally, that's an example that is taken in the developing countries, which have really pushed forward on this path. So you create a vehicle which is a borrowing vehicle and not the government directly, and your lending happens through the capital market process or the lending institution process, which is a dedicated lending institution, and of course the working capital and other needs from the banks. So this makes for a very elegant borrowing structure. So this is something that could be explored, because when the NDB was set up, the same question was there. Is there space, or is it the right time for another development bank? What was established there is countries of the South can come together, set up a development bank which has a better rating, a significantly better rating than its parents. So in our case, in the case of NDB, the credit rating of the BRICS countries was probably just about investment grade. But we had a rating of AA plus, and the highest rated bank country in our members was China with an A minus. So we had a AA plus. So actually, in a way, there was a transformation in the rating when this institution started borrowing. So there are a lot of learnings that are coming out now, and the policymakers will have to think about this and then look at whether it is appropriate to set up a bank given our needs. But the needs are going to be large, that is for sure, because high aspirations have been set by the government, rightly so. To meet these, I think you need institutions which could provide the support for this process.